Welcome back for another edition of the Better Decisions podcast. I am sitting here today with my good friend Miguel Solis, and Miguel is going to have a conversation with me about the commercial real estate market. Something that we've actually discussed, and we work in the same office, dare I say it, part of the same group. So first of all, I'm going to ask Miguel to introduce himself to the audience, to the crowd. Tell everyone a little bit about yourself, who you are, what you do, how long you've been doing it for, why you do it, and anything else in between.
Well, David, first of all, thank you for having me here at the podcast in your office. And again, I want to thank you again for helping me do the switch to Douglas Elliman, because you were a big part of why we crossed over.
I didn't know that.
Yeah, you did.
Thank you.
You convinced us we were here interviewing. So thank you again. Again, guys, my name is Miguel Solis. Been doing real estate now for about 30 years. 20 of those years I've been doing commercial real estate. I started off doing my multifamilies. From there, I opened up into industrial and then anything in between. And what do I do with David? Besides the money, it's a passion. I work 10 days a week is a joke that I have here at the office. Because I'm here on Sundays.
You actually do, because I usually come in early, and actually, because we sit, if you were sitting in the office and you were to come into our office on any given day, usually in the morning you'll find myself, and then opposite is Miguel. So when I say we work closely together, we work really closely together. I'm geographically as well as professionally close together.
That's it, yeah. So we always meet at the coffee bar.
Yes,
at the kitchen,
usually getting caffeinated at 8 a.m.
There you go.
So I think that one of the interesting things is, like, I'm a residential broker, and this is where I kind of spend all my time playing, and obviously I'm running around with clients observing their behavior. You obviously handle the commercial section, so I know you do you do residential as well, but you have a unique skill set in the commercial space, and I've felt as a commercial broker who's just all about numbers. I mean, everyone who follows me knows me, says, okay, if I want to know about the numbers of the market, what's going on, the analytics, the statistics, you have the software. I have Condo Geeks. I have our statistical analysis page. And I spend time playing in that world, helping clients, shall we say, make good, quote unquote, investment decisions. And I know commercials about numbers. You guys are all just about numbers and getting returns. But I feel like in this commercial world, residential guys tend not to drift over into that sector, and commercial clients tend to be commercial clients, and residential tend to be residential clients. But it doesn't have to be that way
at all.
And I think that this is our opportunity to demystify that sector of the real estate market. So if you're watching this, and this is who I'm talking to out there, those people who are watching this saying, I'm sitting with some money in my pocket, I've sold a piece of real estate, commercial or residential, I've got a 1031 exchange, or I'm just looking for a good investment opportunity right now. I want to keep my eyes open, my options open. What is out there just apart from buying a house or buying a condo? There is commercial. And with that in mind, the David Siddons Group formed this commercial division of which, we partnered with another top producing team within the group to create this brand. And so this is what we're going to do now. Talk to you guys about the market, what you can do, what you can buy, what makes sense. So Miguel, there are several different types. Let's start really at the baseline, because I don't want to get too complicated too fast for those who, so they can play catch up and understand the real estate terminology within commercial.
Definitely.
There's 5 different types of commercial real estate: multifamily, office, retail, industrial, and land. So I'll say it again: multifamily, the apartments, the townhouses, the duplexes; office buildings, self-explanatory; retail,
shopping centers,
and then obviously some of that more brand stuff: the Starbucks, the CVS's, Burger Kings, the industrial,
the warehouses, industrial land, doing a lot on the river now. So we're seeing it all come in.
All that stuff. So there's a large section. With those different types of commercial real estate, why are people drawn to these different types? What are the benefits and what do they hold? So let's start with like the most obvious one, what's considered probably the hottest right now, multifamily. Let's start with multifamily as a baseline and then work from there.
Again, I've been selling, my forte is the multifamilies. Been doing it for many, many years. And I think it's for a few reasons, David. First of all, I think it's easy to buy the multifamilies, depending on what you're buying. We were talking about it before we started the podcast. If it's under 4 units, you can buy it with a residential loan or cash or whatever you want. That would be a fourplex, a triplex, or a duplex. From there, we go into the 4 and above or 5 and above, should I say. Depending on the area, depending on the location, why do people want to buy these multifamilies? And I've been doing this for many, many years. A, the increase in value. B, your money's safer than, when I say it's I have a lot of clients that own a bunch, over 100, 200 units, and they like to touch their investment. They don't want to just see it in the bank. Banks, we all know, interests go up, down, and everything else. With the multifamilies, what they tell me is, it's concrete. They can pass by, they can drive by, and they can touch their property and see their properties, and they're making their cap rates and their return on their money, depending on how much, what they did, where, how, and all that stuff. So I think
what kind of rates are you looking at? Because I'm thinking like 20 questions right now.
That's it.
But what kind of rates do you look at for multifamily? What kind of cap rate can you get? When
I'm looking at a building, let's say a 10 unit that's in Little Havana. Right now, Little Havana, I have a 10 unit right now asking $1.7 million. Off market.
So 1.7 to buy it.
Yes.
Because I always assume, like commercial, when people think of commercial, they think, I can't afford commercial. This is out of my stretch. I'm thinking they see adverts for like $100 million, $200 million properties. So you can buy commercial.
This one would be a 10 unit, 1 bedroom, 1 bathroom, beautiful address, literally about a 3-minute drive or walk to Brickell City, but you're on west of 995. Okay. So the location is amazing. And that's going for 1.7 million. So you're paying about 170 a unit.
Okay.
That's all 1-1s. Again, most of these units, guys, it's owners have owned them for over 30, 40 years, so they don't want to stir up the pot when it comes to hiring the rental. And that's a story of all my clients that, for instance, this seller bought these units back in the early 70s for $30,000. So now we're selling them for 1.7. So their monthly rental is low.
What kind of cap rate? Let's say, cutting to what they might expect to make.
Right now, at the way that the rental income is at this moment, without hiring it, you're probably looking at a 4.5%, 5%. Once you buy this property and you, what we called fixing it up.
Yeah, you mentioned that earlier on. Like put some, because you said they don't want to stir the pot. They just have the tenant paying. But let's say you did and you want to improve it, that cap can change.
Completely. So what I do is I usually do both numbers. I do what's right now, the current rental rate versus the market rate.
Okay.
And you see the difference.
And the market rate can be a big spread of about 20, 30% above.
I'm going to give you an example. These are renting, I think, for $1,400, $1.1. One's fixed up, slightly fixed up. You're looking at about $1,900, $2,000.
Okay, so this is a 25% jump.
Of course.
So why wouldn't someone want to come in and do that?
And that's what we're doing right now. We, without even putting it on the market, I have a few people looking at the property, putting LOIs together, letter of intents, because they know that it's well worth it.
So let's say I'm an unsavvy investor, or say I'm unfamiliar with commercial. I haven't done this before, and I've never owned a commercial property. And now I've got to, how am I going to run around and have to collect the rents myself? Am I going to have to be there with a hammer? Because I'm not a handy guy. So if you ask me to fix my house, I'll probably put a hole in the wall.
That's funny.
So is there people around? You've done this long enough that can come in and say, I'll fix these units up. I'm going to charge you X number of dollars. Fix it up, and then obviously we change the rents. And then how do I, the guy that doesn't want to pay more than $1,500 a month, he's going to move out, going to bring someone in. How does that work? Is that doable?
Typically, when a client buys the asset, we go in and we send out the 60-day letter that is required to let them know that we are increasing their rent by XYZ. If they don't want to stay, they're more than welcome to go. And actually, most of the new owners want them to go because they want to get in there and fix it up and hire the rent. And most of them will stay, believe it or not, with the new rent without you touching the unit, which is very curious to say. But we just had one now that we sold. We increased on them the 60-day notice with $1,000 a unit increase.
So you can take my brain's kind of is fizzing here because I'm thinking just running the numbers in my head. So you can be running at a 4.5% cap, but you can potentially move that to a 6% cap
in less than a year.
In less than a year,
or more.
And then additionally, the upside, the value, the appreciation of the asset, which is, and I always say this to residential buyers: don't let the tail wag the dog. If you get caught up with your cap rate, you want to look at the appreciation of the market. And Miami also, we know the Miami appreciation market's gone through the roof. And migration numbers just came in like a couple of days ago, and Miami is the fastest growing city in the US right now. It had like 2% growth last year. So just doing simple math, there seems a lot of upside for the multifamily.
Completely. That's what you're seeing. You know, again, these properties, I do not put them on the market, and we have clients coming in. Obviously, I have my list of buyers ready to go. My savvy investors that own units, Dade, Broward, Palm Beach, Monroe, the Keys. So they're waiting for it. So the minute I get something, the first thing I do is I reach out to my list.
Yeah, so I want to come back to this whole accessibility of the product because often commercial, you know, if I want to buy a house, it's easier. Just go online and go. Yeah. People get a Zillow, Trulia, Realtor.com, whatever. 1,000 different websites. But finding commercial to a lot of people is still, it's not in the mainstream. It's not something that people do all the time. It seems to be left to the, you know, a particular demographic crowd that is not to the average layperson on the street. It's just not that their MO. So now we're making this can be very much treated no differently than if you were to buy a house or a condo. There are ways to manage this, make it profitable, and be a high return, low risk investment.
Definitely.
I want to come back to that, but there's obviously a few other, you know, let's punch through those.
Okay.
For the sake of this conversation, let's punch through those other ones first of all. There's other types of commercial real estate, and then we'll kind of dig back into it. Office buildings. Look, we just had how many? I mean, there's an article I wrote about hedge funds moving to Miami. Tons of different businesses from, you know, the Citadels of this world, all the way down to some smaller groups, some entrepreneurial groups looking to take up office space. You got the office space market,
or even smaller. The attorney with I just hired 10 attorneys to work in their firm. I need some space as well.
Yeah.
So we're seeing it across the board with the offices as well. In the pandemic, a lot of people stayed home, so we saw a little bit of a decline in the office rental market and sales, but they're back up again because obviously we're seeing that the life is back to what so-called normal was 2 years ago. And we're seeing with the office spaces, like the retail space as well, David, you know.
Do the rental, and I'm thinking some of the locals, are the rental numbers for commercial out of office, out of whack with what they cost? To make it more sense for a lot of people, they should be looking at buying their commercial space, because I know from a perspective, there's the tax discounts, which again is another part of our conversation, but there's tax discounts for buying commercial that can save you money, and it makes more sense rather than just paying someone's mortgage on commercial, on an office, that you buy something.
And I think that goes across the board, David, as well. You know, people say, you see these rentals. I own rental properties, and I see them, and they've been living in my building for 10, 20 years, and you think, well, they don't buy something, you know, but they're very comfortable just renting. Same thing with the office. What you should obviously buy a building or buy office condo instead of throwing away your money on rental.
If you're in a long-term business and you're doing it for 10, 20 years, it's like renting a house for 20 years. If you rented a house 20 years ago and you're still renting today, you are probably having some major regrets, as you should.
And you're seeing it across the board as well. With that, you're seeing that. I have people that live in my rental properties for the last 20 years, like you're saying, and they tell me I should have bought. I hear that a lot.
Yeah.
But they don't. And they continue renting, which is good for me as a property owner. If not, I would be out of luck, you know?
Yeah.
So.
And then retail. Retail's an interesting one. Retail, and particularly that sector of retail that we were talking about, because I referred you a client. who you're handling, which is, how our relationship works so well. The brand retail, the Starbucks, the CVS's, that whole animal seems to be super attractive. Tell us why. I mean, explain for me a little bit on the retail sector for those who are maybe from out of town, out of state, as this client is, why that's such an attractive investment proposition.
I think, David, as we were talking about, as the out of town investor, it's easy, runs itself. It has what we talked about it before, the triple net leases.
Explain what triple net is, because for dumb it down. I don't know anything about commercial. What does triple net mean, and why should I care?
So bottom line, with the triple net, your tenant is taking care of all the expenses.
Okay.
Your insurance, your taxes, all the maintenance on it. So basically, you rent them the property at XYZ, and you're collecting your rent, and there's nothing else to talk about. Anything breaks, it's on them. Roof goes, it's on them. You don't have to take care of anything.
So I'm not getting a single phone call. Because I'm in New York. Excuse me. I'm in New York. I'm running a business in New York, and I want to mobilize some money, and so I go out and look at buying something, and I buy a Starbucks for say $5 million. Just pick a number, and something happened. I don't have to pick up. I'm not going to get a single phone call from that tenant. No one's going to bother me. I'm just going to keep drawing money
and increasing your yearly rent. You're typically about 3% a year.
So 3%, but obviously that changes over time. But additionally, the appreciation of the asset is obviously a large part of it.
As well.
Examples of let's stay on the Starbucks conversation. Okay. Let's say Starbucks in 2020. I bought a Starbucks in 2020. What is an example of maybe a working example of somebody bought in 2020? What's that Starbucks worth today?
Right. Let's say they again, we were talking about the one in Broward that we were looking at for the client. They paid 2.9. They're asking now 5.2 with a long-term tenant in place for the next 20 years with increases every year. So
the longer you hold that asset, the more value it's going to be because the cap rate's going up and up and up over time.
Because you're getting your increases in rental.
Yeah.
Every year.
And it's usually because it's pinned directly against inflation and other factors.
Yeah, everything they take everything into consideration, but typically these long-term leases have, we usually see the 5-year with a 5-year option just to renew your lease. And with these Starbucks, with the big fast food chains, we see them that they'll sign a 20-year. Right now I'm working with a major fast food chain that's coming from the West Coast to the East Coast. They haven't been in Florida. They're looking for 200 different out parcels in the next 5 years, and they're ready to sign 20 to 25-year leases on all of them.
That's going to lead me through into the next, let's say, asset type, commercial asset type, where you've got industrial, which is industrial. I think we need to explain what that is, and then land. And you explain to the audience that connection between land and that retail, where you buy the land and then you build the retail asset.
Right. There's many, we were talking about the zoning and all that, the growth in Miami. So typically we have, or I have investors that will come in, buy the land with the proper zoning, of course, and build the structure, the shell. It could be a CVS, it could be a Walgreens, it could be a Starbucks, it could be a Burger King. And then they lease back to the tenant for XYZ amount of years.
So it's almost like it's kind of like the equivalent of owning a piece of. Imagine this: I'm selling you a piece of residential real estate. It's like buying a piece of land with a guaranteed buyer waiting on the back end,
basically
ready to go, giving you a buyer who's not just going to buy it from you. They're actually going to. It's like, well, should I say, having a guaranteed tenant with a guaranteed level of rent increase in perpetuity as long as you want to hold it.
Exactly.
Which is beautiful. I mean, you give that model in residential. I don't think there is a residential model that would beat that. That's pretty hard. It's kind of like what we jokingly were saying off camera. It's like if you build it, they will come. That was an interesting one because that expands beyond just buying the land and building, but buying the land, building something, and then by virtue of it being a pivotal part of the community, part of the infrastructural necessity to an environment, that other things develop around it, which then further increases the value of the asset.
David, if you go down south now, I was showing my fast food chain guys last week, 230, 240th, and Old Cutler, US 1. It's incredible what's going on with that. That was basically wetlands. Soggy Bay. It's incredible, and we're seeing these mega malls coming up, the super Publixes. And when I called to get out parcels for these guys, there was none left. McDonald's, Burger King, Chick-fil-A, everybody had taken possession of them.
They go where the people are, which is one of the interesting things about this crossover between residential and commercial. Because when you understand the human behavior, the crowd, the people, who's moving in, why they're moving in, you can start to predict their needs.
That's it.
Like I know that we were having this conversation part of off camera as well. So we're sitting here right now in our office, which is in South Miami on Sunset Drive. And we were remarking on, obviously, we've seen the growth of Coral Gables. We've seen the growth of Coconut Grove. But we also recognize the incredible growth of areas like Pinecrest now, and how new homes are being built in this market. And the study on our 2023 forecast, I was just studying a few days ago the residential new home construction in Pinecrest. Up to this point, we had 2 homes to ever sell over $10 million. And now we have 8 homes on the market over $10 million and one at 16.5, like blowing the numbers out the water, and more to come because these other markets have saturated, which means there's a very wealthy crowd now moving into these sectors of the market, and there's not as much to serve them of what they need. There's not enough high-end restaurants. There's not enough Starbucks around. There's not enough of a lot of different things that they want, which leads us to believe that there's a lot of opportunities in these emerging markets, these areas around the peripheral.
Completely. Again, one more time, we're talking about going back down south. Obviously, the demographics are different a little bit further south than High Pines, Pinecrest, Ponce Davis. But we're seeing these mega malls, mega shopping centers coming up. And around it, we're seeing the multifamilies going up as well. The big developers, the Lennars, the Caribbean Homes, they're building around these shopping centers. So one more time, what you were saying a little while ago about you build and they will come. They're coming.
Yeah, I noticed that. I drive, so on a weekend, I ride bike, and I'll go from where I live in Ponce Davis, which is right here, which is a really, it's a very high-level neighborhood, and I'll ride south, and I'll go down to Black Point Marina, and then I'll go around the back up towards the expressway, and I'll see all these new homes being built all the way along Lennar, just building row after row after row. The population growth, the growth is going to keep happening. The world's population is now up however many billion it was 10 years ago, and it's not going to slow down. And I think that the key migration into South Florida, I think in the next 10 years, forget the last couple of years, the growth that we've had in the last couple of years will be nothing compared to what we're going to see over the next 10. And if you are looking to invest, I see such upside in commercial. And this is not an academic, theoretical conversation. The beauty of this is that this is embedded in what we do every day. Like 95% of the time, this is fun. This is like this I'm not a professional podcaster. It's not like I do this and this is all I do. I don't sit behind a camera and a microphone.
Are you sure, David? I'm kidding.
You know what? I think I'd be a lot better than I am at this. But 95% of the time, like you, we're out there selling. This is just us regurgitating what we experience and what we learn from talking to 1,000 people and drawing on our understanding of what their needs and wants. And obviously, as an economist, which is the study of human behavior, I'm actually studying human behavior. So are you. So what I love about this is that when a client comes and if you pick up the phone and say, okay, I'm thinking about why should I buy this Starbucks? Why should I buy this CVS? Why should I buy this multifamily? Because we'll be able to then regurgitate our experiences of the crowd of the demographics that live in these markets and what they need and want, and then what they're going to need in the future.
100% correct.
So going into, again, kind of now we've been through this this base. We've given us a base. We understand our base of commercial options, and understanding how you can buy a property. Selling a residential home is, what's all about the buying and selling process? So if I want to buy a home right now, I can either buy cash or I can buy with a mortgage. You mentioned earlier on, if you've got a fourplex or less, you're able to treat it like a residential, so work on the same kind of residential loan premise.
Completely. We're doing one now, a fourplex in Little Havana. She's coming in with 5% down.
So how does it work on a commercial if you buy something else that's not defined as that? Like, is there options? Is there?
Yeah, typically, right. Let's say I'm gonna use an example of that on a 10plex or on a 10-unit apartment building. You're typically looking at about 20-25% down. Some banks require 30. Obviously, they look at the rent rolls, what's going on with the rent roll. They also look at the market rent as well. So, for example, if the units are getting they're being rented for $1,000 a month, 10 units is $10,000, but the market rent is 20. Just to give you an easy number, they take into consideration the actual rent roll versus the market, and they adjust. And then obviously your knowledge as well. I think the banks are a little bit back then, David, maybe even 15 years ago, you had to be a savvy multifamily investor or owner to get a loan from them. I think.
Yeah, I was going to ask you, like, how do they look at you as a potential?
It's changing a lot. It is changing a lot. Now they look at they look at the asset, and what the numbers are doing at the end of the day, David, they're going to be rented. They're always going to be rented. Might go up a little bit, so they'll adjust on that as well. But it's always going to be there's always going to be the income coming.
So
in.
what you're saying is, like, I'm not a commercial. I don't own any commercial property right now. I don't own anything at all.
I'm going to change that, David.
But you're changing it as we speak right now. This was great because it opened my eyes to stuff I hadn't even thought about before. I want to go out and buy something commercial. Will I be able to get a loan? Let's say I'm 30% in, 40% in. And a lot of residential buyers are there. They're not at 20. They're often all cash, or they don't need to, but they'll be, let's say, 40 or 50 or whatever it is. So I could go out and buy something that is a 10plex or maybe a Starbucks, and I can get a loan?
Definitely, without a problem.
Great, okay. And are the rates much different to residential?
I'm gonna give you right now. We're closing on one, which is at a 6.5.
Okay, so it's pretty much matching what we might see in the residential market.
And then a lot of these sellers will do the owner financing, David, which is great. Obviously, with a little bit more skin in the game. I'm going to give you an example that we're doing one now, which is he's asking for 35% down. He's going to hold the no interest only, 5 years, out of 5.5. He doesn't need the money.
So a note of 5 years, and that kind of, so basically, yes, not a problem, and there's options out there. Secondarily, let's say I keep going down this rabbit hole. Okay, so now I bought the property. Now I've bought this property is commercial, 10plex, and I don't know what the future holds in 3 years or 5 years or 10 years from now, and I'm thinking, how long do I need to hold this for maturity? What is it just as easy after 3 years or 4 years to 5 years to sell this?
Absolutely, completely. It's like buying a residential property. Increasing in value daily, as you know.
Yeah.
Here, it's depending on the location, everything else, and at what price point you buy it at.
Yeah,
definitely.
But the longer you hold it, the more it matures, the more the rent goes up, the more the value of the asset goes up in relation to that. So
one more time, look at that my 10plex that he bought for $38,000. Obviously, look what he's making now on it. Different times, but you get the idea.
Yeah.
Everything's going up in price,
So people will then say, well, this all sounds fantastic. Now, being an investor, I want to understand my risk. And you'll look at like residential market, there's obviously risk, and obviously our job is to show people product that gives them a high return with a low risk. Explain the risk facets of commercial and why it might be a little bit different to the residential sector.
Well, one more time, what we were talking about before we got on, the numbers game. And commercial real estate, it's all numbers. And risk-wise, it's the same. What we were talking about with the houses versus the 10plex. There's always a risk involved in anything that you put your money into, but very minimal. Very minimal, because at the end of the day, you have 10 units renting out at $2,000, and the rent goes down a little bit because the market's shifting, and you have to lower your rental from 2,000 to 1,800, you're still making the money on it. It's not like you. It's not like
you're still in positive cash flow. So the bottom isn't going to fall out of the value of that asset
at all. You're not going to have 10 people completely vacating the property and you're left with nothing.
So it's not like, I used to have conversations with people who got involved in investor product in Brickell as a good example back in 2015. And I would say, get out because this market's going to correct. And it did. It corrected heavily. But that was because it was a non-necessity. It was just a luxury, if you will, and it was an investment mechanism. But as you said, people have to live somewhere. You have a client who you've worked with for years, and he said...
For 30 years.
Yeah, well, what did he say?
5,000 units that man has all over the world.
And he's obviously done very well for himself because he has 5,000 units.
And he always told me, he's Miguel, markets will go up and down, but somebody always has to live somewhere. And if it's the $1,000 rental in Little Havana or the $10,000 rental on Brickell, they're always gonna have to live. So you have to adjust maybe a little bit, David, but you're not gonna lose that tenant.
Yeah.
And when you do, somebody's right behind them waiting in line.
Yeah. And historically speaking, if you look back over the last 20 years, I mean, have there been big drops in the commercial markets at any point in time?
At all.
So in 20 years, there hasn't been big commercial drops in that kind of sector of the market.
At all.
So it's unlikely to start now.
Even in the first, what I call the first depression, back in the 05, 06, when it hit the market, rentals went down a little bit. Things were happening in Miami. Miami was shifting. You just touched on the whole Brickell investment units that people were buying. You remember as well as I do, these clients that were standing in line the night before to get good units. And the same thing, I told them, guys, go another route because they were trying to buy up 2 and 3 units at a time.
Yeah.
So, and I always told them, buy a 4-plex.
Yeah, I was going to say, there are certain guaranteed human behaviors that we're going to see. People are going to be born and people are going to keep drinking coffee. There's a number of these things that are almost guaranteed. And if they don't happen, then it's basically Armageddon because I can't imagine a world where these variables don't exist. So when we've got a situation here where we've got a potentially good return asset with a low risk, and in many cases there's opportunities of a very high return as well. Talk us through some of the, give us examples of what we would classify as a high return asset that you've worked with, a working example where someone's come in and basically made a killing.
We were talking about it before starting. I do a lot in Alapata is a part of Miami, which is middle to lower class.
Where's Alapata for those? We'll flash up a map so you can see the geography.
We're doing 12th Ave. Well, we have Wynwood and then we have Alapata, which is west of Wynwood. So it would fall on the west side of I-95 between the 112 Expressway, which is northwest 36th Street, and then the 836, which is about 14th. And then up to the airport. It gives you an average range of where it's at. The river, very important that the Miami River, goes right through Alapata. So for the cargo ships and the shipping lanes, it's genius. And I've been selling there probably for about 15 years now. Stuff that was picked up. Again, perfect example. First 3 acres of land that we bought for 3.5. My guy got rid of it 7 years later for $10 million. It was just a piece of land. There was no dirt. It was dirt. There was nothing else.
So you didn't have to do much.
But it had 375 foot of water, of riverfront, to park the cargo barges that do go to.
Was he making any money on it during that time? It was just sitting
He was using it to park his vehicles.
But there are also mechanisms that you can have high returns that you can actually draw an income from.
Completely. So that's always been one. Again, well, he was actually leasing out the waterway to the cargo ships that were coming in from Haiti, Dominican Republic, and stuff like that. So it was a win-win for him. He doesn't have anything with water, meaning any ships. He just needed the dirt to park his trucks. So this was an idea which was a win-win. He was parking his trucks while making very good money. And when I tell you, David, he was renting out these slips for about $70,000 a month.
Wow.
Which is not bad.
So obviously as Miami gets more popular, it gets more expensive. And so people say, well, maybe I can't afford to buy into the Miami commercial real estate market. Obviously, the more expensive you go, the smaller the playing field because the less the money's available. I'm just curious to know, do you see people coming in and buying in groups, like me and my 3 buddies or me and my business partners? And do you see that happening? And if it does happen, how does it work?
We have now, again, we have a group out of Pinecrest.
Okay.
A bunch of guys, very wealthy. They got together, 4 of them, and they've opened up an LLC to start buying these multifamilies. Yeah, one of the Hialeah properties that I was telling you about, they just put a letter of intent actually last night on that property, and I took it to them. One of my gym buddies that I hang out with, I told him, John, I have this, and right away he was like, let's go check it out. And we did. So yeah, I am seeing it because instead of having one guy, buying a $5-6 million asset, 4 of these guys are putting in $1.25 million.
Well, I was thinking that, like, you might come together with a group of 4 friends or 5 friends and say, okay, we all put in $2 million each, and now we've got $10 million to play. Okay. And obviously, you've got a nice income coming in from whatever asset you're buying, whether it's Starbucks, CVS, or it's a
shopping center, whatever it
might be. And then obviously you've got the appreciation, and you look at this low risk, high return asset, rather than, you don't want your money sitting in the bank. You might not want it sitting in the stock market because we just saw what happened over the last year, and it's still, there's these uncertainties. But if you want to, balance yourself against that, then this is a really good mechanism.
Definitely.
There's 2 more questions I've got. One is the geography, and number 2 is the taxes. I'm going to go into the taxes first of all, and then I want to get into the geography because I want to finish off with... We've identified there's opportunity here, and there's desirability for this audience. If you're listening to this, you're going to realize very quickly that there is a tremendous amount of upside by investing in commercial real estate and the right real estate. And the returns that you can get will probably surprise you, and the risk that it involves will also surprise you. So much higher returns, much lower risk than you would anticipate. The taxes, there's an additional benefit. So, I remember a story back when there was I won't say the name, but it was a very well-known president who left office not too long ago, who was devaluing his real estate assets because he owns a lot of real estate with his name on the side of the asset. If you can't figure that out, then you really need to study a lot more and watch some news. And he hadn't paid tax. There was a lot of taxes he hadn't paid. How would that work? Because there's a devaluation of the asset in order to then not pay tax and then keep rolling it forward in perpetuity so you don't pay tax. How does that work? Can you just explain that for the layperson?
No. And again, again, we were talking about the 1031s exchange as well. You know what I mean? So, and we're doing 3 right now as we speak. And with the devaluation, same thing. The depreciation on a property, what you put into it, what you did to it, and then based on that, you can start.
So I own a $10 million. Let's use $10 million. A really nice round number. I got a $10 million commercial asset, and I'm going to devalue. What do? I tell my CPA to devalue the asset by $1 million every year for 10 years. So by the end of the 10 years, so whatever margin I was going to make, whatever cap I was going to make. I'm not going to be paying on that. Is that how it works?
Basically, and you have to get obviously a very savvy CPA.
Yes.
that's the bottom line.
But this is all legal. This is not like tax evasion.
I'm right. I'm not an accountant or a CPA, but yes, and some of my properties,
So unlike selling, let's say, a stock where you've got to, pay on capital gains, you're in a situation here where you can roll it, and that's what a 1031 exchange is, which I'm sure you guys watching this who buy residential, know what that is. Yeah. You keep rolling it forward in order to make money, and obviously you grow your portfolio to the level of your friend who owns 50,000 units?
5,000.
5,000, I'm sorry. It's a huge number.
Yeah.
And there's a big upside on that. And if you do that over a long-term period, the capital gains would otherwise be enormous, but it's a good way to delay that.
We're doing it right now with the 1031, and actually it's gotten to, after I think it was after 2017, before you had to identify the property before closing on yours and selling yours. Now you can actually do the reverse. So you can find a property, close on that property, close on the property that you own already, and then you can get your benefits, your 1031 benefit off of that. Reverse 1031 is what it's called.
Nice.
So there's many ideals now that which they're getting creative. The IRS is getting creative to help out with that as well. You know what I mean? To a certain point. So,
It's amazing. I mean, reading this, somebody was saying it was like a loophole. They thought I was going to close this. I thought this was going to get closed, but it hasn't been closed. This is still goes on. So we've identified there is obviously these different types of real estate asset, these different classes that we can deal with. There's ways to leverage it and finance. There's ways to come together with groups and take a big piece of commercial down in a group of people, in a group setting. There's very high levels of return, potentially high levels of return, very low levels of risk, born of a fundamental need, not a discretionary purchase, not an investor product, a second home or a condo or something else like that, but something that people need, whether the economy is doing well or whether it's doing badly. Fundamentals at play, safe. So we've established this is a great mechanism. Now, I got to find the product. Let's talk about some of the geography of Miami, because we talked about the peripheral areas, so the emerging markets, we call them. Are you seeing that there is what I call a bleeding, a fuzzing of the lines where people are moving out from these areas where they were traditionally trying to buy commercial in like Coral Gables, where you'll see this movement out? There's expansion. There's areas of expansion through Miami right now where you would recommend there's opportunity. And what are those areas? Like, give me a few names.
Perfect. Let's talk about Alapata again. Alapata, even 5 or 6 years ago, David, wasn't being touched. Why? Because it was all Wynwood. Everybody was buying the Wynwood, the warehouses. Wynwood, as we all know, blew up.
Wynwood blew up like crazy. There was a story somebody told me way back like 10 years ago where two brothers came in, they borrowed some money off their dad. They bought a $3 million commercial. Then they sold it 3 years later for $25 million. I was like, where I need $3 million. I don't have $3 million. I would have pawned my children for that just to get them.
David, you're going to crack up. I sold an acre of land on North Miami Avenue and 28th Street. Small little wooden house there. There's a restaurant there now. Nobody wanted to go in there. I'm talking about maybe like mid-90s. I listed it for $28,000. Nobody at the office at Coldwell Banker.
When was this?
Mid-90s. And I would go in, and literally every time I would go in, I would have to go in with a stick because I had all the drug addicts living inside this building. And we finally sold it for $14,000. That property sold about 5 years ago. For almost $4 million. It's
a pretty good return on investment.
Didn't do nothing. Basically.
There's a lot of commercial. You can do the math on like.
Look at what I was telling the Alapata warehouse that my guy bought 3 years ago. I sold it to him for 2.1, and we're under contract right now for $8 million.
See, I see a lot of people putting money aside into mutual funds and other things, saying, I'm saving my kids for college for 20 years from now. When they're going to leave college, I'm going to have this nice little nest egg and there's going to avoid taxes. Well, that's one way of doing it. I'm not going to say it's terrible. But if you do the math right now, if you're watching this and you've got, let's say you've got very young kids and they're 5-6 years old and you're thinking about another 15 years from now, imagine what would happen if you bought some commercial real estate and then 15 years from now where it's going to be. If you do the math, it's very likely that it's going to be way, 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 way above anything else that you're going to see in other mechanisms, and at low risk. Because everyone likes to talk about, well, I bought Apple when it was X amount, or I bought Amazon when it was this, or Disney, whatever. But there's also enough stories where people will say, well, I bought Tesla when it was this number, and then it went to this number, and now it's gone back to this number. Yeah, but that doesn't happen with commercial. You don't see 50, 60% drops.
Again, when we were talking about it a little while ago when I said it's you can touch it, you can feel it, you can see it.
Yeah.
You can paint it, you can walk it, you can go
tangible, real
That's it.
Asset.
That's it. And again, the market may go up and down, and the real estate market, and David, you know as well as I do, I've been doing this for 30 years, so I've seen all different markets, and the commercial market has pretty much been stable all this time, and obviously increasing. Again, where do you buy a property 3 years ago for $2 million and selling it for $8 million, making $6 million quickly? Obviously, I'm not telling you that's every day, but you do see it.
Yeah.
Going back to the demographics, we're seeing the different areas next. Okay, so Wynwood, Alapata, people are crossing in west. Now I'm seeing it going north to Lemon City. So Lemon City is between Little Haiti, which obviously we all know it's been blowing up over there. And now Lemon City, which is between Alapata and Little Haiti, is blowing up as well too. So same thing, we're seeing the bigger boys, and then but I'm seeing the Burger Kings and the McDonald's that weren't there before, David, and
Really?
now they're going in.
And what about to the south? Let's say
It's
South
crazy.
Miami.
If you and I go for a cruise in your Porsche,
If it's going to make me this kind of money, I'll drive you around for a week. I'll be your personal driver.
That's it. We'll go to lunch over there, and you'll see, hey, David, it is crazy what's going on. These are my fast food guys. We're looking at now a 5-acre parcel. They don't need 5 acres at the entrance to the Keys in Florida City, right at Campbell and US 1. Why? Because they're seeing it. They're like, Miguel, there's one way in and one way out. We have to build shopping centers here and obviously put their fast food mark on the front. But that's said because he's like, anybody that goes in and out of Florida has to cross us. Yeah. And
the great thing is this kind of commercial. Like people say, well, I own a Chick-fil-A. You were talking about Chick-fil-A, and I was like, well, in my stupid non-commercial mind, I'm going, well, does that mean I have to get behind the counter and start flipping burgers? You don't touch this stuff. It's the McDonald's model. You're just holding the real estate.
I was yesterday. I was telling Fernando, one of my guys that works with me. I saw an interview with a young guy, mid-30s, that owns 8 of Chick-fil-A's. He's a quadrillionaire.
He's a what?
He's a quadrillionaire. He owns 8 Chick-fil-A's.
Sign me up. Give me where's my Chick-fil-A?
But again, you see what I mean? Have you any Chick-fil-A that you go to? You see the lines outside.
You were telling me about the returns on a Chick-fil-A.
About $8 million a year.
I had no idea.
Either did I.
That's insane. People are eating a lot of Chick-fil-A.
Either did I. We're talking about other fast foods. I can't say the names, but that they're not doing as well. So but the Chick-fil-A. So the dirt for whoever owns a Chick-fil-A or wants to put the Chick-fil-A somewhere, you're
you can get those. Like if I wanted to go out buy one of those,
you go to the franchise, right? Just like the same thing I'm doing now.
It's exciting stuff.
So,
I
can see David only a few.
We're going to go out and I'll buy you lunch now. Let's go to Chick-fil-A.
There you go. I like that. That's awesome.
Dude, this has been awesome. This is great. I want to let everyone know that if you're interested to know more about this conversation about buying commercial real estate, what's involved, demystifying this whole animal, which I feel has been kind of like hidden behind a secret door with an elite crowd of, people would say to me, the commercial real estate market is a bunch of old dudes who sit around and they don't share anything with anyone, and it's like held away from the masses. It doesn't have to be this way. And this is what we're doing. We're opening this up to the audience and showing you an alternative investment mechanism with 2 people who have done this for a really long time. You longer than me.
Yeah.
Just want to make that clear. But this is a great area. We're going to keep the dialogue coming. If you want to chat with Miguel, I will connect you directly with him. Miguel, brother, thank you for coming. Thank you so much.
A pleasure, David. Thank you for having me.
As always, thank you for watching. I hope you learned a lot from this episode of Better Decisions Podcast, and stay tuned for another episode coming soon.